Jessica, good day. So the market damage from the trade war tensions between the US and China continues, and I suppose no different on Wall Street.
Thanks, Devin. Yes, exactly. That is the case here. We're really seeing the U.S. and China both harden their stance when it comes to the trade war here, and that is what is really affecting markets. We had the Chinese Communist Party's newspaper also publish some commentary saying that essentially U.S. politicians are making moves to start a technology cold war. Now, we are also seeing banks react. Goldman Sachs coming out and saying that it sees a continued stalemate between the two. So all of this is really impacting equities. The S&P 500 index down nearly 2% today, and the stocks that are most affected by the potential trade disruptions, such as semiconductors, automobiles, energy shares, all tumbling.
And then that trade tension continues. Investors then begin to get worried about growth, and by extension, their view on the demand for oil drops. I suppose that's why we've seen such a tumble in the oil price today.
Yes, we have definitely seen crude oil in a downward spiral here, falling sharply lower. In fact, Brent and WTI both posting their worst losses so far this year. Brent down 4.5% today, WTI closing nearly 6% lower. It all started yesterday when we received that U.S. inventory report showing that U.S. crude stockpiles rose by quite a large amount. Gasoline distillate supplies also higher at a time when demand usually causes inventories to shrink. So that was quite negative. And then, of course, oil falling in sympathy with equities on the latest developments in regards to the U.S.-China trade war, like you pointed out, really sort of hurting demand or potentially affecting demand in the future. And then, of course, I do want to bring up technicals because we can't ignore those. WTI did fall below its key 200-day moving average today. Now, that really invited more sellers into the market. So really just a combination of all of these factors has really pressured crude oil prices lower.
And then finally, Jessica, shares of Tesla had a choppy day of trading. CEO Elon Musk sending around an internal memo, you'll tell me, that was apparently quite upbeat.
Yes, Devin, that is exactly right. It was quite a wild day for Tesla, let me tell you. Shares really switched between gains and losses today, a bit of a roller coaster ride. Essentially, in pre-market trading, shares were declining on some bearish commentary that was released by analysts. Morgan Stanley, in fact, had a call with investors yesterday, a private call, might I add, and said that it sees Tesla as more as a distressed credit and restructuring story. Morgan Stanley also making the call that Tesla shares could fall to as low as $10 in a worst-case scenario. But then again, we did see shares recover later on in the session after an internal memo was circulated, and CEO Elon Musk had written that memo and essentially said that it sees Tesla having a good chance of exceeding the record deliveries it had achieved in the last 3 months of 2018, and that it's already received more than 50,000 net new orders so far this quarter. So again, a bit of a wild ride for Tesla today.
All right, thanks indeed. Jessica Summers there for us in New York.